$110 billion. That's the amount of value that was just vaporized from the crypto market in a single week. But, this wasn't just a simple price drop. No, this was a collapse, fueled by a hidden force that acts just like gravity.
That's right, $110 billion in market cap erased from Bitcoin in just 7 days. It was a staggering loss that caught thousands and thousands of traders completely off guard.
So on the left, you can see the market cap on December 8th, sitting pretty at $1.83 trillion. Now look to the right. Just 7 days later, it's crashed down to $1.72 trillion. But here's the thing. These numbers, they only show you the result. The cause of the collapse was a ticking time bomb, hidden just beneath the surface of the price.
So how in the world did a move that looked incredibly bullish, a breakout to the upside, actually set the trap for this catastrophic drop? I know, it's completely counterintuitive, and that's exactly what we're going to deconstruct right now. The answer is all in how the trap was set.
Okay, so first, let's talk about this setup. This is where the market conditions were perfectly engineered to create the cascade we saw.
It all started back on December 9th. Take a look at this chart. See that sharp spike up towards $94,000? That wasn't a sign of strength. It was a bull trap. It was designed to bait optimistic traders into opening up leveraged long positions, betting that the price was going to keep soaring higher.
And this is where the idea of liquidation levels becomes absolutely critical. So what are they? They're basically price points where all those leverage positions are automatically force sold. On these heat maps, the super bright yellow bands you see represent massive pools of these sell orders, and they literally act like magnets for the price.
So by December 10th, the price had already fallen back down. And as you can see from the growing density of these bright yellow bands right below the price, a massive amount of fuel in the form of these liquidation levels is now building up. The trap is officially set. And hey, if you want to catch this type of deep dive analysis ahead of time, make sure you subscribe to the YouTube channel.
So with all that fuel just sitting below the market, the sellers began to test the weakness. This right here, this was the warning shot.
Just 2 days later, on December 12th, the first crack appears. You can see the price gets pulled down, slicing right through the initial layers of liquidity around that $92,000 mark. Now, this wasn't the main event, but it was a crucial test. It confirmed there was enough selling pressure to start hunting for those deeper, bigger pools of liquidations.
What came next was this deceptive calm. On December 13th, the price looks pretty stable, doesn't it? But look closely at this heat map. Just below the current price, a massive, untouched pool of liquidations, that incredibly bright yellow band, is just sitting there, waiting like a giant target. If you're finding this breakdown valuable, do me a favor and drop a like and share.
And that brings us to the main event. This is the moment where all of that built-up pressure is finally and violently released. Okay, it's the very start of December 15th. The price is just hovering right above $90,000. That massive yellow band we were just looking at, that's the line in the sand. Billions of dollars in leveraged positions are about to get completely wiped out if that level breaks. And here we go. This is the trigger. At 8 a.m., the floor just gives out. You can see it clear as day in this massive red candle. The price slices directly through that $90,000 level. This first wave of liquidations creates a flood of automatic sell orders, which then forces the price down even further, and that triggers the next band of liquidations below it. It's a chain reaction.
And this chart illustrates the aftermath perfectly. Just 4 hours later, the price has cascaded all the way down to $86,000. And notice something? Those bright yellow bands, they're gone. They have been completely consumed by the cascade. This is the domino effect of leverage in action playing out in real time.
So let's just quickly put the entire week into perspective. The trap was set on December 9th with that spike that baited all the longs. The warning shot was fired on the 12th with that first dip, and then the final cascade was triggered on the 15th, wiping out all the leverage that had built up below. For more updates on developing market structures like this, make sure to follow us on Twitter.
So after the dust finally settled, where did the market land? Let's analyze the new landscape that this whole cascade created. Looking at this final chart, we can see the market has established a new lower range. The storm is past, and you can already see new, smaller liquidation bands starting to form. This is where the next battle will be fought, as the market starts to rebuild its structure. And if you want to stay ahead of that next move, make sure you're subscribed for our regular updates. This entire event just proves how leverage acts like gravity, constantly pulling the price towards the largest pools of liquidations. And it leaves us all with one critical question. Now that the board has been reset, where is the fuel building for the next cascade?
Understanding this market gravity is your edge. If this breakdown provided you with some value, subscribe for more deep dives and follow us on Twitter for real-time updates. We'll see you in the next one.